Alright, for our breakout trading analysis, everything will basically be revolving about the box. So these are boxes plotted correctly, will also be your basis on your entries, exit points or take profits and stop losses. It's also used for projections of your long-term endpoints of a trend for an intraday trading or a swing trade as well. So it is very important for us to follow the rules on how to plot these boxes. Now let us discuss about the pre-Asian box, which is colored teal, almost green here in our charts. So it's 1800 to 2145 of Pepperstone time, 1800 to 2345 of Pepperstone time. The time frame will always be M15. It's composed of a full body candles, so we are not considering the wicks here. Even for this one, we are not considering the wicks. And the rule here is it should have a maximum of 50 pips. But there are times that there are high impact news during the time frames 1800 to 2345. So what we could do is just get the smaller swing from this time frame here, because at this movement, if you're going to plot it, we have about more than 100 pips from 1830. So this is not a valid pre-Asian box. So what we could do is just get this small box here, and that is your valid pre-Asian box. For as long as it is a small swing that is composed of at least 20 pips and not more than 50 pips. Now let's move on to our pre-London box. The pre-London box is the orange colored box in the chart. So the time frame that we're considering here, by the way, it is Pepperstone broker time. So it's 3 a.m. to 7 a.m. It is always at M15 time frame. Now this time we're considering the wick, the thin line on those solid candles. So we're considering the full swing of the time frame. So for this one, regardless of how many pips it would have, that is okay. So that's a valid pre-London box. Now we also have a New York box, which is a box that's happening during the New York session. So it's a small time frame box. It's 1615 to 1730. The same as the pre-London box, it's a full swing of the time frame, week to week plotted at M15. Now, how are we going to trade these different boxes? So, we are actually duplicating the boxes based on the current time frame. So, let's assume that on September 16, on September 19, the price has not yet been reached, or it's just an opening day. So by just pressing F12, it will show the single candle for every M15 15-minute movement. So as you can see here, it's still within the main box. Alright, so here is an example of a good entry. So what are the possible entries for the boxes? You will always consider a buy and breakout, a sell and breakout, a buy and retracement, or sell and retracement, or an order block entries, which will be discussed later on the next few slides. So for an example here, at the September 19 movement, this is a good buy and breakout. So we're considering a buy here. And how are we going to get our take profits? Our take profits on the scalp would be a 50% of the box, one box up. This is, if you double click the box, the white colored rectangle at the center of this box is your 50%. You can get a 50% take profit or a full 100% of the box. Now, considering that there's no order block, so here's an example of an order block, but we will discuss the order block later. Okay, so it retraced, so we could consider a buy on retracement here. And then the price broke again on the upper box and it went for the 50%. You see there? So this is a 50%. And then it broke down on the pre-London box. So again, I'm going to extend one box up and one box down. So this time, we are now considering the pre-London box as reference for our movement, or the pre-Asian box. So this time, it broke the lower box of the pre-London box. So our take profit would be basically 50% of that's a quick scalp trade. So yes, we have that 50%. Then we press F12 again. It retraced. We have an order block here and still consolidating at the 50% of the lower box. Okay, so here we have almost 100% of the box. And then it went up here. I'm going to plot that. Rather, I would choose to use a trend line for better reference. So it broke, went back to the main box, and then we have our take profit of about 50% again, or 100%, depending on the order block. We have an order block here, wherein we will discuss it later on. So let's press F12 again, and then it rejected. Now it has entered the New York box, and then we will be using the New York box for our breakout trading analysis. So this time, I'm going to drag the box down. Here we have a sell on breakout, and our take profit could be a 50% again, or 100%. Now that's how we trade the box based on breakout and retracement. Now, how are we going to protect ourselves from the trade? So if you're considering a buy, just like for this one, this is a buy on breakout. This is a buy on breakout as well. We are considering our stop loss one box down. This will be your SL. Or for here, for this situation, since it's a sell-off, it broke on the second box down of the New York box. So we're plot, we are putting our stop loss on this level. So this is, if you're going to sell, our stop loss will be 1 box up plus the spread of 5 pips. So let's move this up. So we are also considering the spread on the stop loss. So let's check on the following day. Now on the following day, we have 1 box up and 1 box down. This time hitting almost 50% of the trade, because we have another order block here. I will change the color to white. By the way, I will discuss the order block on the next few slides, but we are basically focusing on the box trading or the box strategy for now. And as you can see here, the price is playing within the main box, but right after the pre-London box, the box broke at the lower level of the main box of the pre-London. I'm going to remove this lines for us not to be confused of the previous price that happened yesterday. So this time it's a sell and breakout, and we would want to consider a take profit of the 50% of the box, which is this line here. I'm going to press F12 again. Yes, it did hit our 50% of the box, of the pre-London box, but we could also consider a buy on retracement, rather a sell on retracement based on this order block here. As it retraces, as it reached the 50%, it retraces. So we could enter on this area. Okay, so again, it broke the 50%, or rather the 100% of this box, but it is the 50% of 1 box down of your pre-Asian box. So you would have to trade with caution every time the price reaches the 50% of the box. So again, because of this order block, it reached 100% of this box. Alright. So we keep on duplicating the box as the price moves along. So as you can see, every time the price reaches the 50% of the box, it starts to retrace. And you have another order block here at this area. And then it went down. So you have a sell and breakout here. And then 1 box down until your endpoint here. As you can see, now if you would assess it until the New York boxes develop, for the pre-Asian box, the price moved 1, 2 boxes inexact, and for the pre-London box, the price moved with 1, to 3.5 boxes down. Now let's check how we are going to trade using the New York box. So we're going to duplicate one box up and one box down. Now this time, the price broke here, but it reached the 50%. So this is the safest take profit that you can have whenever the price breaks up or down the box, and then it consolidates. Usually when the price reaches the pre-Asian box, forming at the pre-Asian box, you would always have to expect something consolidating. Now on the final example, so let's plot one box up again and one box down. So as you can see here, there's a rejection. So every time there's a rejection, there's a possibility that it would stay within the box. So now it has been forming on the pre-London box. And as you can see here, the price at this level broke one box down. So you will consider a sell on this area here. And then as you can see, you already had taken profit at the 50% and the 100% of the box while forming the pre-London box. Right? And then look at this one. It broke, the price broke upward from the main box. So you would consider a buy, taking profit at the 50% or the 100% of the box again. That is to be exact. And again, it went down. Still within the box here, and our pre-London box, rather our New York box as well. So I think this is a high impact news that had happened. So let's try to move this one box down, and let's check if it's still within the ranges of the boxes. Yes, it is. And then here, let's move one box up again, seeing the price break from this level. So we have a buy and retracement and buy and breakout situation, and we have taken profit on this area, basically because maybe there's an order block that's hindering the price. Let's check on the higher time frame if there is an order block. Yes, it has an order block, which is in this area. Let me shrink the size. So that's it. There's a rejection on this area. That's why the price went down. Let's just continue with our evaluation of this box. So this time, let's have one box down, rather 2 or 3, and let's measure how accurate the boxes are. Okay, so for the pre-London box, it reached the 75% the pre-London box and the 50% of your pre-Asian box, and then it went down because there's an order block from the hindsight, which is this area. Now at this point, since it went down, we could consider a sell on breakout or a sell on retracement. See here, it retraced just beside this order block. By the way, again, I'm going to discuss the order block later. and then it broke again the price from the pre-Asian and rather pre-London and pre-Asian box. That's why it went down, returning to the main box of the previous day, consolidating within this area. But as soon as the price broke down again from this area, it went down for 1, 2, 3, 4.5 boxes of the pre-Asian box, and 3/4 of your pre-London box. So guys, this is the simplest way of how you trade the boxes. So you are using breakout and retracement strategies to trade your boxes. And again, your stop losses will be, if you're going to consider a sell here, your stop loss will be here plus the total number of spread. So that's it for your box strategy, and I hope you do learn a lot of things based from the 3-day movement of prices with the application of these boxes. So I hope that you will be able to take note of the rules on how to properly plot this box, and I assure you that you will not get lost in trading. So on to our next slide.